Morning, good afternoon, and good evening, world. This is Doug Brunke, and I'm here at Global Chamber headquarters in Scottsdale, Arizona, where I've heard that the temperature is...
It's going to be 82, 83 today.
82, 83 Fahrenheit. So global warming, we understand it is warm here, and apologize to everybody who is in a cold region. I know several of you are, and several of you are not. We are trying a couple new things today, and so we're very interested to hear your feedback. We're kind of in a transition where we're going from a 90-minute to a 60-minute event like this, or 2 or 3 times a month globinars. And so today will be somewhere in between 60 and 90 minutes. So we'll see how that goes. We've also asked each of the speakers to submit some questions, and we encourage everybody who's on this call to live to send in your questions. And if you're catching this as a video afterwards, please send in your questions, and we're happy to contact any of the speakers. The other thing that we're doing today is we're starting with an exporter, importer, or investor as a keynote first, and then we're having experts follow that person. So let us know what you think, and we'll go from there. I think we've also asked each speaker to take about 5 minutes max, so that we do have time for questions at the end as well. So encourage everybody who's on the line to ask questions, everyone here at our headquarters to ask questions as we go, either as you're on your Q&A box or here, or any of the locations. You'll probably need to come up to the microphone after each of the speakers are done. Our first speaker is that exporter slash importer slash investor. I've known Steve Shefveland for over 10 years. He's actually sitting in Hermosillo, Mexico, where he has one of his contact centers. He's got call centers in the U.S., in Mexico, and in Ghana. And he recognized the operation, the opportunities in Africa well before many other folks have. And he's probably got some horror stories over the years, but he's also, fortunately for him, had more success stories. And so we're going to kick off with him to talk about, what does it take to set up an operation in another location. Steve, greetings. Hola. Greetings to Hermosillo.
Hola. Gracias, senor. Thank you so much. It's very nice to meet all of you. As we say here in Mexico, buenos dias, buenos tardes, buenas noches to all of you around the world. It's nice to be invited and to meet all of you. So thanks for the opportunity. So yeah, as Doug says, I've known Doug a long time, and I'm rather entrepreneurial. Some people think I'm a little crazy at times, some of the things I've done or I've attempted to do, but I'm in the contact center industry, or sometimes it's referred to as the business process outsourcing industry. And within that industry, there's a lot of companies, a lot of players that are handling all different types of business processes in foreign markets. So I think just a few comments, that I can, as I was thinking about this, and I want to kind of just share 3 or 4 quick points that I have learned to really focus on if you're interested in foreign markets and doing business in other countries. First of all, you really need to make sure, I think, that you understand what is the reason you want to go there. Sometimes it's easy to get wrapped up in, well, my competitors are there, or lots of other companies are there, but you really want to think long and hard, what are the real reasons? And one of the overarching reasons for many companies is purely cost. If you're doing business in a developed economy like the United States, there is a cost savings. And so to a certain degree, that's sort of a given. So assuming that cost is a given, you really want to take a look at, am I going to establish quality? So if I go to a foreign market like where I'm at here in Hermosillo in Mexico, am I going to have the same level of quality as if I was doing this in Phoenix, for example? So you want to really think long and hard about, how does quality play into what it is you're trying to accomplish, along with cost. And then the other piece is differentiation. You may want to go to a foreign market because you want to differentiate your services, or differentiate your product or whatever it is you're producing or selling or servicing. So these are the things I was thinking about when I went to the countries that I'm in. So using those, cost, quality, differentiation, what is my competitive advantage, using those as kind of an umbrella, there's 4 things that I really focus on every time I explore a new country or when I went to these countries. And the first is, for me, it's labor. And I think that's going to apply if you're manufacturing a product, producing a product, or if you're delivering services. What is the quality of the education? And so when I first went to Ghana in Africa, for example, I spent 6 weeks to 2 months there, just living there, spending time with the people, understanding the educational institutions, understanding the languages. What does it take to learn some of the languages? What does it take to find managerial talent? What would it take to develop talent into be good managers? And the other thing you have to factor in, I mentioned education, you have to factor in, cultural alignment, cultural and even religious alignment. A lot of countries, religion is a major part of the society. And you have to think about, how will their belief systems, faith-based systems, play within your business? Because whether we like to acknowledge religion or not, in a lot of foreign countries, that's a major part of what makes up the labor base and how they make decisions. So the other thing to think about is obviously languages. That's a big deal. Can you find people that speak English? Can you learn the local language? And then physical distance. How far do you have to travel just to get there? How far do you have to travel for your colleagues and your clients to get there? So these are all things that may seem obvious, but are really important to spend time focused on learning. The second thing I can say is laws, the laws of the country, and what's the government commitment? Are they committed to your types of services or products? Will they support you? And then very important to that is really the laws. What are the business laws? Do they have good enforcement of the laws in that country? What's the historical case law for legal cases that are going to come up? What are the human resource laws? That, for me, took a long time to really wrap my hands around all of the laws around how you hire and or fire, terminate employment. And they're quite different than the United States in many different countries. And so I had to spend a lot of time learning that. And as Doug says, I've got some stories that have backfired on me by not spending enough time really learning some of those. And then the third thing I'll mention is the banking system. A lot, when I first entered in Ghana about 10 years ago now, there was only 2 or 3 banks that were truly global. The rest were very much local banks. The banking system has come a long ways in 10 years. But when I first started, I had some concerns. So I had to really spend time understanding the banks that are there. What's my ability to transfer money in and out? What are all the fees around that? What are the regulations around that? And then what are the tax issues? That's another major piece, kind of the banking and tax piece that I guess I should kind of put together in one. And then I guess the fourth piece I'll say is infrastructure. What is the infrastructure like? Meaning you can start with basic roads and airports. What does it take to get in and out of that city? What's the transportation system like? But then probably more important than that is, do they have good, solid, stable electricity? What does it take to get backup power to your facility if the power goes out? How often does the power go out? In Ghana, for example, even in 2018, the power goes out for about 5 minutes twice a day. So it's just the way it is there. And then, of course, bandwidth and data connectivity. You really can't do any business in today's environment without good bandwidth and data connectivity. So just to quickly summarize, labor is critical. You've got to focus on labor, understand the laws and the HR laws especially, really get to know the banking system, and the tax system and the tax laws around your business, and then infrastructure. Those are four major topics for going to a foreign country that I've spent a lot of time on, and some of it I had to learn just going through the process, I guess. So hopefully that's kind of a quick summary, Doug. Hopefully it didn't take too much time, but those are the things that I focus on. And I don't have a product that I produce. I have a service that I deliver, but I think it applies to whether it's a product or a service from a holistic perspective.
Awesome, great. When you talked about power outages, your picture disappeared. So thank you for timing that so effectively.
I'm sorry.
Good touch. So I'm sure it was the Zoom system. So thank you very much for setting that foundation. And I encourage all the speakers to talk to what you heard Steve say. I mean, he talked about some pretty fundamental things. I think most of the speakers we have are talking about a little bit more higher level services, but really, a lot of the things, especially probably coming from your experience in Ghana and to some extent Hermosillo, but not as much. There's some basic things that you've had to worry about. And so you also touched on accounting and tax, and that's our next speaker. It's Jordan Friedman. He's the owner of JF Global CPA. Jordan, you're calling in from Denver. You've worked with companies, exporters, importers, investors in over 30 countries. Congratulations on your success, and we're looking forward to hearing more from you from Mile High above Phoenix.
Well, thank you. It's a pleasure to be here. I appreciate it. So to dovetail a little bit on what the last speaker had to say, so I do have some PowerPoint slides that I've shared that probably can be distributed, and those touch upon some issues that are important for any business that's looking to go abroad and at a very high level. My area of specialization is working with companies that have sales of under $10 million, and smaller businesses have some unique issues when they attempt to go abroad. Amongst those are the lack of control that you might have in a foreign country. Bigger companies take with them armies of accountants and attorneys, and they hire plenty of people that reside in the countries where they are. For smaller companies, it's often a person who's got a great idea or a great product, and they're looking to locate in another country, take advantage of lower labor costs, take advantage of global reach, take advantage of opportunities that are afforded for manufacturing or production. When going abroad and doing those things, if you're really good at your business, you may not necessarily be someone who's a knowledgeable accountant and aware of differences that exist between the tax laws and accounting rules in your country of destination as opposed to the United States. When that happens, there can be some real problems. Among those problems, for example, are those that occur when you're faced with situations where there's not necessarily a strong rule of law, there aren't necessarily strong accounting procedures and protections in place, but you as a business owner, being a person from the United States, still have to comply with U.S. tax laws. That can result in a problem where your financial statements that are being produced in a foreign country, they're not entirely accurate for U.S. tax purposes. It has been our experience dealing with financial statements that we've received from places like China, Mexico, Kazakhstan, that oftentimes smaller business people are told by their local advisors, what do you want those financials to say? Instead of giving them advice on how to actually produce them correctly. We receive the financials, and oftentimes retained earnings don't tie to a prior year, or accounts receivable simply don't make any kind of sense. We will provide counsel to our clients when we see those kinds of things, but because they have difficulties with language, local customs, and familiarity with how the rule of law applies in countries of destination, it can be difficult to navigate those societies, and it can lead to other kinds of problems, including someone tells you, well, this is just how business gets done in our country. But you may be unaware at the time they tell you that the way business gets done in that country can put you in violation of U.S. tax laws or the Foreign Corrupt Practices Act, And so it's important to be well advised before even attempting to go abroad. Once you've made the decision to go abroad and you've found you found a team that's going to advise you on accounting, legal, tax, and logistical issues, then it's important to start taking into consideration what are some of the issues that you're going to face, just basic tax, basic considerations of U.S. tax compliance. The first of these are the choice of entity that you're going to make in going out of the country. You may start out with what you think is a limited liability company outside the United States, the equivalent of an American limited liability company that's treated as a pass-through entity. But we have rules in the United States for default entity classification and what are called the check-the-box rules. An entity abroad where no one member has unlimited liability is treated not as a pass-through entity, but as a C corporation. That's important to know because you may want to do something called a check-the-box election to make your foreign corporation into a pass-through entity to allow for the flow-through of startup losses. These rules are important to remember because if you think you have one type of entity but you end up with another, your investors and partners can wind up very upset and you can wind up either with tax liabilities that you weren't expecting or an inability to use losses that you were hoping to use. It's important also to remember that in every country there are certain types of entities called per se corporations. There's a published list by the United States government. Those companies are not eligible entities. One cannot make an election to change their tax classification. Next is to keep in mind certain tax traps for the unwary. An important one is to understand that a controlled foreign corporation, which is a foreign corporation that is more than 50% owned by U.S. shareholders who are defined as more than 10% owners of the stock under new law by vote and value of the foreign entity. If you're already abroad and you've already accumulated profits, it's important to be aware that the new tax law that was just passed has rules for repatriation tax, meaning your earnings are currently taxable in the United States according to a complicated set of rules that are in that law that are beyond the scope of our discussion here. Moving forward, if you have a controlled foreign corporation, you become eligible for the new tax law's participation system, which allows for 100% dividend received deduction to your U.S. company after taking into account taxes that are paid outside the United States. It's important to also be aware that the rules for determining a controlled foreign corporation have changed under the new law, such that if it used to be that a non-resident alien's ownership was not attributed back to a U.S. person, but today it will be. The next important item is to understand what permanent establishments are and how tax treaties apply to your business. Permanent establishment in general is when you have an office or you have employees outside the United States that are managing your entity, which can cause you to be taxable in a foreign country. It's also important to understand that tax treaties modify and govern the tax treatment of an entity that operates outside the United States and the extent to which you can be taxed in the United States. This is particularly important in light of tax reform because even though you get 100% dividend received deduction for corporate dividends paid into the United States, you still are going to be subject potentially to withholding tax outside the United States. The last thing that I'll mention with our limited time is that on this last slide you'll see a listing of a variety of different tax forms and filings. The important thing to remember here is that for every financial action that you take outside the United States, there is almost invariably some kind of disclosure that is required in the United States, both at the entity level and for key executives or owners. What we do as CPAs, most importantly, is to keep our clients on track because basically every single one of the filings you see here comes with a $10,000 penalty for every one that you fail to file. Failures to file these kinds of forms and disclosures put many businesses, especially small ones that are not aware of the disclosure requirements, into a position where they have to do remediation. Remediation from a tax perspective is always substantially more expensive than staying on top of these disclosure obligations as they arise. Obviously, the realm of tax, and especially the brand new tax law, is a vast amount of material. something that we can't possibly cover in any one webinar or probably in a dozen. But hopefully the slides will alert you to the fact that it's important to remember before you take any action abroad, you should be in contact with your advisory team of attorneys and accountants so that you know what the implications of those actions will be. Thank you very much.
Thank you very much, Jordan. Really appreciate that. Continuing the theme on taxes, tax season is coming up here in the U.S. and actually all around the world. So now we're going to switch to Chris Hall. He's the managing director at Global Tax Network. I believe, Chris, you're calling in from the East Coast. Let us know where you are and, of course, what the temperature is. And you also have some experience in Europe, quite a bit of experience in Europe. You graduated from the University of Leeds, and apparently you have some significant issue with the trials and tribulations of the Sheffield Football Club. So probably not something a lot of the folks on this call know much about, but they are very interested on the tax side. So what can you do to help us build on this conversation?
Excellent. Thank you. Yeah, thank you. I'm in, this morning I'm in Stamford, Connecticut. We have, it has now stopped snowing, but we have about 3 inches on the ground this morning, which is just a mild sprinkling for this winter so far. So that's not too bad. And yes, much like the tax laws, the new tax laws from Trump, it would take another 12 presentations to truly explain my love of Sheffield Wednesday Football Club. So I'll pass on that this time and jump straight into the tax piece, if you don't mind. So what we do at Global Tax Network is we're really helping companies who are moving people across borders, and we see this a lot with firms, particularly US headquartered firms who are trying to expand abroad. Our first two speakers did a great job in terms of talking about all of the things that you need to do to get set up, the considerations, the legal, the tax, all of that, very much from a corporate perspective. But what we'll see time and time again is that these companies will spend all this time getting everything set up, and then they'll say, oh, I need somebody to run this thing, and then they'll just pick their best employee and say, get them on a plane and get them there. Now, there are all kinds of things about immigration, which again, I'm not qualified to speak again, which would give people heart attack in that regard. But from a tax perspective, there are also things to think about if you want to send your people to go and help set up abroad that you need to consider about. There's three things I really want to talk about today. And again, they echo things that have already been said. The danger of assumption, that can be an area where, again, you end up in a remediation situation, which again is ultimately more expensive than being compliant in the first place. Another consideration is getting your people to go. What should you do, but also what should you not do in terms of getting them to go? Because you may want them to come back, and if you offer them too much, they might not want to come back. And that's a challenge that we see a lot of times because it can be very expensive to have people out there. And then lastly, yeah, just to touch on that, the cost of failure to plan and to execute when you are moving people abroad. As compared to the entity description, the location, the laws, this seems like it should be the easy piece, but unfortunately, quite often it isn't. If we can just switch on to that next slide. So talking on the dangers of assumption, as we've already mentioned, assumption is risky for global expansion, whether it be, oh, we'll just assume that US laws apply around the world, which, believe it or not, you would be amazed how many people will sort of push out that view that, oh, they must have similar laws, and that's just never the case. I think certainly when you're moving people around, the things that I would list to not assume is that don't assume that if you go to somewhere for a short amount of time that you don't have any reporting requirements. Or that people may not be taxable. People assume, oh, well, I was there for less than 183 days and therefore there's nothing to do. That's not the case. And that also talks to this myth about, oh, well, we have a tax treaty in place and therefore it must apply, so I have nothing to do. Again, that's a false assumption. For example, you could be going to the UK or Canada sending people there for relatively short amounts of time, 2 months, 3 months, and you're thinking, oh, I have nothing to do. These are friendly countries because we have a great tax system with them. We have social security agreements with them. I've seen 2 companies in the last year get $1 million plus penalties for failure to report people who were in the country. They didn't have a tax bill, but they just failed to report that they had people there, and $1 million penalty. Now, if you're trying to set up a new business and you're getting $1 million penalty, that's a big deal. The other assumption, which I love, because as soon as I heard Steve talking about Ghana, was that, don't assume that authorities will not know that you were there. We had a situation in Ghana a couple of years ago. They had a company who they were there to do construction projects for the government. So they had people on the ground with the blessing of the government, but the contract had not been signed. And so at the time, until the contract was signed, the government refused to give them work permits. So that the government already knew they had people there, but they didn't have work permits. If you read the rules said we should have filed individual income taxes for those people. We got in, and to Steve's point earlier, we got in and really found out what's going to happen here if we file those individual income tax returns. And they basically said they will show up at your sites and arrest these people. Now, if you have American laborers or engineers in Ghana, the last thing you want to do is have them in a Ghanaian prison. So, it's just that, the making of assumptions of, oh, this is how we do it in the West, so that's what we're going to do, can be a dangerous combination. And again, associated with that, do not assume that income is taxed the same in all countries. We see that time and again. You may be a startup or a young company and you're going to expand into Europe. You could put, if your people have stock options, RSUs, that could completely blow any value that they have in those if you put them in the wrong country, because they will recognize the income at different times. So let's say you're aware of all this, but you still want your top employee to go and run this business. And quite often that's going to be the case. Just be careful what you promise these people. If you turn around to your top employee and say, that's fine, we need you there, it's business critical, and maybe it is, you need to figure out, okay, if you offer them housing, if you offer them education because they have kids, if you say, oh, we'll fly you back 3 or 4 times a year so you can visit your family. All of these are actually fairly standard things that we see, but you've got to understand that that's going to cost not just the money of providing that benefit, but typically there's going to be a tax gross upon that as well. So your 50,000 of housing in London could suddenly be costing you over 100,000 once you've done the gross ups and things like that. Now, there are ways to mitigate that, but again, if you don't plan properly, you're going to get the full benefit. As I say there, if you do give all of these things, be prepared for the difficulty of bringing people back. If someone offered me the opportunity to live in London with free housing, free education for my kids, a nice little bit of spending money through cost of living adjustment, and then in 2 years' time they say, hey, do you want to come back to Stanford? Yeah, not so much. So a lot of it is just making sure that you're very clear on what the expectation is. Do you put a time frame around it? And knowing how to bring that people back, because it may be business critical to have them there in year 1 and 2, but the overall role for whoever you send is probably had a limited time to get them set up, and then you want to bring them back and probably put in a local hire in their place, which would be a lot more cost effective. One thing I'd say to that effect, I would strongly advise not using base salary as a way to incentivize people to go. So if you have somebody here who's making 100,000 and you say, oh, just go to France for the next year and we'll pay you 175 in bonus, that's great. But when you try and bring them back, they'll be insistent that their base salary was 175 all along and therefore shouldn't be adjusted down when they come down. So just be wary of using salary changes to manage that. And then just moving on to the next slide. The execution, what I've said a lot, it's classic. I think, all speakers will say the same today. Know before you go. If you're going to promise housing, how much is that going to cost you? If there are ways to do this and to send people, investigate that before you put them on a plane, because by the time they get there, you could have blown those opportunities. As I mentioned before, the failure to comply can be, it can literally just blow the viability of a new venture. You will see quite often where the employer now is 100% responsible for taxes that haven't been withheld, and there can quite often be penalties up to 100% of the tax that should have been withheld. So in two instances there, you've basically doubling the cost of anybody you've put in that country. And that could basically just ruin any expansion plans that you have. And even this day and age, as I mentioned before, the Ghana example, a failure to be compliant or to do things in the right way, it's not just about money. You can have people arrested. We've had issues in Turkey where we've had clients who've been threatened with arrest because they haven't done X, Y, and Z around work permits and tax disclosures. That's not a good place to be. So don't make assumptions about how things are going to work. Understand what you need to provide your people, but most importantly, how much is that going to cost you to put them on there, and have that as part of your business plan. So you understand that putting 5 of your team to get Mexico up and running sounds like a great idea, but if it's going to cost you more than the value, it's not worth doing. And then make sure you plan and execute on that compliance. And I'll let everybody here figure out what the PPP is, but proper planning is the beginning of it. So I'll leave that with you, and thank you very much for your time.
Very good. Thank you, Chris. Really appreciate good information. We're going to now talk to the next 2 ladies. We're going to kick off next with Doris Nagel. Doris is the CEO of Globalocity Services. We're going to kind of take a little bit of a step back and think a little bit more on the strategic side of setting up operations. And Doris, I believe you're there in the Polsinelli office in Chicago, and I'm guessing it's probably somewhere around 82 degrees as well, Fahrenheit.
I'm sure it's 82 somewhere, Doug, but I wouldn't say that it's 82 here in Chicago. So, unless it's on some scale that I'm not used to using. So, thanks so much for hosting this Global Chamber and the opportunity to present. I've been really fortunate through my career to have been involved in setting up offices. I counted one day at almost 45 countries, and it's amazing opportunities. And I think of all the war stories, the potholes that we fell into along the way, and I thought maybe some thoughts about what I learned and what my colleagues learned along the way. I would say that I will echo the prior speakers to you want to make sure it's really the right option. All too often companies get wrapped up in it, they get pulled along. It sounds neat to put push pins on a map to show how global you are, but really think long and hard, because I can tell you that in almost every case, the setting up of a local office has taken more time and cost more in resources than anybody anticipated. So take a look and make sure you've really evaluated all the other structures before you launch off to set up a new office. There are, in many cases, partnering, licensing, distributors, even maybe through e-commerce you can find good solutions. But I think the key, and I think a couple of the other speakers, certainly Chris and frankly Steve and Jordan, I think have all emphasized the importance of planning and preparation. You've got to crawl and then walk and then run, and the planning and preparation is really the part where you learn to kind of find your way around. But I will say, though, even with the best planning and preparation, it is often really difficult to truly understand what it's going to take to set up a new office. And that's why I say It often takes more time. In fact, it almost always takes more time and costs more than the team of people expecting it. And that just means you need to be prepared to deal with some of the unknown bumps, which is really hard sometimes for business people to kind of get comfortable with, because they will, well, let's research it some more. Well, you can, but at some point you just have to take the plunge and just understand there probably are things that you never even thought through. Underestimating operational issues. This is, a couple of the speakers, I think Chris pretty well articulated the human resources piece. Both Jordan and Chris alluded to the tax pieces, and so did Steve, and finance as well. But one that I'll stress is IT. If I have to have picked one operational issue that caused things to get delayed, the most of any of them, believe it or not, was IT. So don't forget about that piece of it. And the last thing is that a lot of companies somehow have unrealistic expectations about the payback period. And this is true for even big experienced companies. They somehow forget that, frankly, these new offices they're startup companies. They're starting from ground zero in many cases, and they don't have resources. They have no brand recognition. It takes a long time, and so companies that want to go and set up a new office in many cases need to really be prepared, not only to the first point, to invest and invest enough to be able to give the office a running start, but to not place unrealistic expectations about how quickly it's going to pay back. All right. I think we talked already about this. Make sure it's your best option. Let's talk about, so say there, go ahead to the next slide. But I think the next question really is, and some of the other speakers alluded to it, is what I call the to be or not to be question, which is really, I think most people think about a brick and mortar office. You've got an office, it has a sign outside, you got some people that go there. So if obviously if you're a manufacturing or an assembly operation, you may not have a choice about whether or not you have a brick and mortar office. But I will tell you that in many cases, companies are increasingly doing what I call virtual offices. And I want to make sure I'm clear about what that means, though. A virtual office means you do need to set up a legal entity. You do need to file and get your tax ID number and go through and get your permit. But in many cases, you'll need an office, but maybe it's a very small, tiny Regis-style office that is simply your office, and you've outsourced a number of functions. And there are increasingly services out there that will help you find consultants for at least a period of time, local sales agents. There's something called a PEO, which is essentially an employment service that will put those people on a payroll for you. Now, I'm sure that the tax and finance guys on the call, and those of you with that background are cringing, thinking, woo, you're getting pretty close on the human resources and permanent establishment issues. And yes, indeed, you do need to be very careful about those. But just understand that when you're starting up with an office, one lower risk way, at least from an investment perspective, you do need to do your planning and your homework, always. But a lot of companies, frankly, are, to lower the risk in the initial investment, will set up a fairly virtual office. One thing of note, a lot of companies that I've talked to do what I call a third option. They do neither of these, and they do what is called, what I call flying under the radar. And that is, yes, indeed, they'll hire a consultant or a sales agent, or they'll outsource a couple of consultants and call them their employees, and they don't register the business, and they don't get a tax ID number. And to Chris's point earlier, just be aware that's a very risky strategy. Governments are everywhere, are greedy and want their cut of the pie. And if they find out that you've got people on the ground that are handing out business cards with your logo and have using that, it makes it seem like it's the company address. Yeah, you may find yourself really regretting taking that kind of an approach. So I mentioned that there are people issues. I think everybody on this call so far has alluded to the people issues, and that's not surprising, right? People are everything. They will make or break it. And whether you decide to send someone from the home office over, and there are a lot of issues related to tax planning, as has been alluded to, and immigration issues. But even if you're hiring a local person, I think a lot of companies really underestimate how different things can be. So, you know, I've talked to a lot of execs and human resources VPs, and, you know, their mindset is, well, at our company we have this plan and we reimburse travel and entertainment at this rate, and we give people company cars at this level, and we don't have, you know, a pension, we have a 401k. And the reality is that if you're going with local hires, you need to think about what kind of benefits and what kind of package needs to be put together to attract the talent that you need. Because if you don't attract the right talent, you may save money, but your office is going to go nowhere, and that's a terrible balance trade-off that you've made. So, you know, you may find yourself arranging for a company car for someone at a level that typically wouldn't get a company car. You may find that you are providing for Christmas bonuses that are typical or even mandated, or giving them cell phones, or, you know, there's a whole host of things. So you need to think about not only the package and how you're going to payroll those and how you're going to manage all those benefits, but you also need to think about how you're going to oversee all that, and make sure that you know, you provide enough oversight, because I can tell you that it's awfully easy for employees that are far, far away and are local and are used to doing business locally to take advantage of the system. So I don't want to say people are dishonest, but it happens a lot more often than you might think. So if you're going to have local employees, make sure you also invest enough time to oversee and manage them, and do it in a way that makes sense culturally. I think product-related things people are pretty aware of. I just want to touch on IP and domain registration and protection. That's something sometimes companies don't think about. And finally, the ops issues. I think we've touched on most of those, or other speakers will as well. But again, I'll just put a plug in to make sure that you've got your IT issues taken care of, and that those folks are really, they have the right resources and really are on top of things, or you can find that oftentimes derails your project. All right, with that, Doug, I'm going to turn it back to you.
definitely something for the next one of these versions is to include that aspect into our conversation. I'd like to now switch to Mary Holland. She's the Global Director at Global Payroll Management Institute. Mary has recently been awarded the Payroll Woman of the Year. She's also a certified payroll professional since 2003, so she knows the area of payroll, accounting, and finance, and equity management. Mary's calling in from San Francisco, where it's going to be 63 degrees today, so not quite as warm as some of the other areas, but it's going to rain tomorrow in San Francisco, so hopefully you're ready for that. Mary, thank you for sharing your knowledge today.
Okay, thank you, Doug. And I'm going to take you on a speed journey of things to consider for payroll. When we look at opening operations outside the U.S., we have many considerations. And during this speed journey, some of my fellow colleagues this morning have hit on some of the topics that I'm going to talk about. The first one I want to consider is cultural considerations. It's really important as we move to a new location is to get our feet on the right foot, start correctly by considering where we're going and what are some of the unique things about culture. The cultural dimensions that are from that particular area, are they direct, hierarchical, consensual, or individual? Looking at language, how people communicate. Time zones are always a killer. People talked about time, many time zones that we're going to be dealing with. The working hours are so very different from working hours that we might have in our home country, and we need to consider that things aren't always done as fast as we have in our home countries. We have to build trust with the relationships that we're building so that we know we're getting correct information. Looking at gender and jobs are different outside different areas, and we need to make sure that we recognize that. Along with, as we work in this environment, is really looking at having a global mindset. What does it look like for that particular country, and looking at where we are and trying to be open-minded about the direction. As we move forward after we look at the entity, setting up the process really involves us closely working with legal, finance, or HR, or if we are working in a small organization working with a consultant, because we need to really know where we're going. We're looking at entity registration. Do we need an entity or not need an entity? Because that's going to be important for payroll to understand. It was touched upon of all of the employment laws and working rules. In some countries, we have to do reporting to the government agency on work rules and the payroll provider that we're actually using in that particular location, so we need to be aware of those requirements. There's a lot more reporting for employees, so we need to be aware of that. We need to look at what registrations we need from local income tax, in some cases many social benefits. Do we have to register for a pension? Is that particular location have a collective bargaining agreement that we need to follow and make sure that we're putting things in place? Along with all of the language. So getting some of these forms in a local language, we need to get some support to have them translated correctly so that we understand what we're supposed to be doing. And of course, one of the biggest thing is we really need lead time. With all of these registrations and information that we need to provide, we need enough long lead time. And to build that strong connection with HR, legal, and finance or outside consultants so that we know exactly what we're doing and everybody is on the same page. So that brings us into the next consideration is, and we talked about this, everyone talked about tax and compliance. It doesn't matter if you're on the corporate side or you're down in the payroll side, tax and compliance and getting it right is really important for organizations. And so when we look at taxation and compliance, we really have many things we have to look at. We have to determine what the income tax is for that particular area that we're going to be doing business in. The social taxes, there's many social taxes in some countries. We sometimes have workers' compensation payments that need to be recorded. All of these things need to be looked at and make sure that we understand what they are and the rates. Many countries across the world have sophisticated pension systems. They have employer is contributing into pension systems. We need to understand what that reporting is and making sure we have a good control over what that is and register for those pensions. Taxation of benefits is a huge project. You mentioned equity, so equity across the world is treated very differently. We need to understand that. Simply providing a lunch for training could be taxable in some countries, so that involves a detailed matrix of understanding what things are taxable and where they need to be taxed on income and social taxes. We also have to look at, what is reported monthly and annually and what type of filings need to be done. And in some cases, some of these filings need to be done in local languages in most cases. And do we have support with that? Often it's the support of having the character on the keyboard or somebody being able to read that in local language. So that language support is really key. The employee data in payroll and HR, we have to closely work together because in countries around the world, we're reporting information on payroll and the employee, and we need to make sure we get it right. Often some countries will have us report on day one that the employee is registered and put into a social system program, and then also all of the rules on the employee regarding termination and hire are going to be very important. And then we also need to understand what really is the payslip requirements. Can that be delivered electronically, paper, and what needs to be on that payslip? As you look at employees across the world, there's many benefits that are given to employees. A lot of time off rules are different than we have in our home country. So we need to understand that and make sure those are being reported. Then we move to one of my favorite topics that seems to take forever and really make sure that we have a good, strong relationship with Treasury, who is ever moving the banking. So banking and money movement takes time. So the one thing about banking, I always recommend that companies take a look at this and make sure that you plan. It does take time to set up a bank account. You have local language considerations that you need to have support on. What are the country requirements? Does the country require you to have somebody moving cash in that particular country, and how are you going to make that possible? The setup time to get people and officers on your bank account and what documents are required are pretty intensive. And then looking at any special requirements. In the Middle East, we have wage protection services that have to go through a process before our employees are paid. And then just the processing time from begin to end to make sure that you've allowed enough time at the end after you've done all your calculations to be able to ensure the employee is paid timely. And then that brings us to finally the last piece, and really depending on how large or small your operation is you need to find somebody that's going to process your payroll for you. And a lot of this may be based on what your company's direction and strategy is globally, but really how do you want to deliver the services and what services do you need? So do you need HR services, money movement services, payroll calculation services, and all of the reporting being done? So you need to take a look at that and make sure you have that defined. We need to have understanding of how many employees we have and what that future growth is and where we're going to be going in what other countries, so that when we do pick a provider, we're going to be able to use them for future growth and expansion. What our time frame is to move. Often we want to move pretty fast. 3 to 4 months seems like a short time considering everything we actually have to do, but in some situations that's what happens. We have to look at the staffing that we have and the resources that we have available. Do we have people that understand the global footprint and where we have to go? And that also often brings us into security and data privacy, which is going to be very key. How are we going to secure our data, and are we following all the data privacy rules in the particular country that we're doing business in? And often, if you're not sure what to do, you may start small and use an accounting services or get some consulting services to understand where you should go. As a first step, it might be a good place to start. And after you've gone through that first journey, you're going to probably be very good at building out a roadmap with a detailed deliverable of who's responsible for what, working with your cross-functional teams in HR, legal, tax. And I'm going to say that that's going to be key to make you a success in the organization.
Mary, thank you very much. M is for Mary and M is for magical. Really good presentation and really excellent. The next couple speakers we're going to wrap up and then answer Q&A. So the next speaker is Mike Patterson. He's shareholder at Polsinelli. He's, I think, stepping into the screen with me here. Mike is, as with all of the folks on the call, you're all go-to people for Global Chamber. Mike has been involved with international mergers and acquisitions, joint ventures, strategic alliances, equity and debt offerings, foreign direct investment, EB-5 investments, general corporate matters, agency and licensing matters, market entry issues. Mike's busy. Mike, take us there.
Okay. Great PowerPoint, by the way, Doris. I should get you to do mine in the future. Thanks. I want to say today, you know what today is? It's the next to last day of the month, right? And so you may be talking to, when you're talking to someone in the organization that's going global, you may be talking to someone who has the general counsel or some compliance person, if they have one, who actually cares about, do we do it right, and do we talk to these 5 or 6 people that you've met today, and are we going to fly under the radar, as a couple of our speakers, one of our speakers said, etc. Or you may be talking to the sales side, and today is almost the end of the month, and if they can just get that contract in for tomorrow for that big sale in Venezuela, or if they can ship that product to tomorrow to Kuwait, then they get paid on the 15th for that big number that they brought in, right? So that thing of slow down and do it right really becomes hard when you're dealing with different people in the organization. But that's why we're here, right? You can pay me now or pay me later, as one guy says here in town on the international side. And by the way, we spook people sometimes, and legitimately, we're not just spooking people. There are, as a couple of our early speakers said, you know, I actually have gotten people out of jail in a foreign country on a deal, and there are some risks, and tax-wise, etc. But I also want to go back to, is it worth it? Yes, it is very much worth it. A very small percentages of U.S. companies actually, in comparison to global companies, are doing global business. If you're in the U.K. and you're not doing global, you're on a rock in the middle of an ocean, and if you're not doing global, you're not doing business, right? So why is it worth it? Yeah, margins may be higher. I have a client that's distributing medical devices to 60 countries, and the international part is only 10% of the actual number of products that they send out, but that 10% is way more profitable per item than a domestic sale. And there may be less competition in some markets. Your competitors have to go through all these same obstacles, so get out there ahead of them potentially. There may be some cultural benefits to your product in the country. There's this word in Latin America called malinchismo, which is follows Malinche, who, when she met Cortez, she likes all things foreign. And I can tell you from living in Latin America that sometimes there's a better Latin American product, but people will buy the cheap, less quality U.S. product that has less gold on the jewelry just because it's from the U.S. And so there are some reasons, or green interest in the UK, etc. And I tell people, don't forget that there is some fun for your workforce. This is the part that makes their job interesting. You may find you have some talents. People speak languages, or they've lived somewhere and they know some things that are useful to your business that you can leverage. Next slide there. How far do you go in? Several people have alluded to this. Talk to the lawyer about the decision. Am I going to sell across border only? Am I going to engage in a distributorship relationship? I'm going to do a joint venture with a local partner, branch. What does that mean in each country? I'm going to manufacture in that country. Each one of those, as so many of it talked about, have implications in tax, IP, registrations, import, export. Next slide. Contracting checklist. This is a busy slide. If you email me, I'll send you a much longer checklist that I cut and pasted some things. But let me just run through some things. Do I have a side-by-side contract? and do I say which one is the controlling language in the event of a dispute? Is this one a courtesy translation only? There is a lot there that people miss. Do I do a contract in English? Yes, you may be able to in many countries. Can you specify that Oregon law in Oregon be the place where, or Phoenix, Arizona, or Chicago, Illinois, be the place where a dispute is resolved under that law? Yes, you may be able to do that, freedom of contract. However, you may not. A local law may say it doesn't matter what the contract says, this is going to be resolved in Brazil. Okay, tough terms to get paid, getting paid, keep your focus on that issue, make the price clear. Just a big thing off of this slide, we have this thing in the United States called the Uniform Commercial Code, and people do business every day and they ship product and they have a few emails back and forth and they say, everything seems to work out all right, and part of that is because we have this Uniform Commercial Code that when you don't specify the terms, as long as the price was there and this term and that term, just a few of the basic Dickert terms, the rest get filled in, not always pleasantly. The battle of the forms, yours says net 30, theirs says net 45 on the back of theirs, which one controls. Those things are sometimes worked out in the United States, but the moment you go to Argentina, you do not take that Uniform Commercial Code with you. You can specify some foreign bases of terms that they're similar to, depending on jurisdictions, if they have signed on to them. Apostilles are considering notarizing signatures on documents that you would not normally notarize in a U.S. contract, because later you may need to go back and get an apostille on that notary and send that document to one of those other countries. As some have mentioned, remedies, don't just translate your document into Spanish, into Mandarin, into Portuguese for Brazil. Don't just translate. The remedies are different. You may not be able to enforce all those fine print things that are in your standard U.S. contract, and there may be other remedies that work really well. Let's go to the next slide there. Distribution agreements. Do due diligence on your distributor or your partner. This is so much harder when you go international. You need to know who that person is. Have they been involved in litigation? Is there a local law that's favorable to distributors? If you don't say that it's non-exclusive in Costa Rica and Brazil, you are deemed to have given an exclusive contract to that person by law, even if you just were silent on it, unless you draft around the law. And then that becomes very difficult when you're going to try to get out. Product registrations, this is a big one. If you're doing a distribution relationship with someone in a foreign culture, they're going to offer right up front almost all the time, I'll get your product registrations for you, your import registration, and your health registration if it's a health product, your food registration if it's a food product. But then 3 years from now, no matter what the contract says, I've had three foreign distributors say to my clients this year, I don't care what the contract says. If you terminate with me right now, I'm not giving you back your registrations, and pay me $1.5 million. And one said, pay me $4.5 million. Wow. And so and then my client asked, how long will it take for us to independently get our registrations in Brazil? 2 years. They have an onerous law. So in other words, think about that ahead of time. It's important to slow down, do that contract. Next slide. Getting paid. Should you use credit insurance? Should you use XM Bank or similar? There's a tax thing called the NCDISC. For NCDISC, that talk to your accountants about that. Repatriating. Let's assume you're going to go make buku bucks in that foreign culture. How do I get it back? You could do distributions. That's what most people just plan for if they have a subsidiary there. But what about doing a consulting agreement where you consult services from your U.S. people there? What about making a loan and having loan payments back? What about doing royalties, licensing your name to your subsidiary and having them pay royalties? Interesting thing, the tax people who went before me will tell you that under the tax treaty between here and Chile, between here and China, our tax treaties that we have with these countries, Each one of those activities is a different withholding bucket. And so do some planning. And then, of course, transfer pricing to make sure that when the IRS comes and audits it, that you chose the right rate, et cetera. One last thing I would like to say, a couple of things. Structuring in the labor area, for example, in Mexico, most companies want to set up two companies, an operational company and a services company, because there's a constitutional law about profit sharing at the end of the year. This one is operated often at very little profit. This one has all the profits but no employees, etc. It is actually entirely legal and everyone does it. But make sure you're talking to local people. How do you set up? Otherwise, it's a big gotcha. Then the last thing I would say is we are an attractive jurisdiction in the United States. When there's something bad happens in your foreign thing, your plant manager in the Baja California decided to do a wet t-shirt contest and didn't tell you about it. Now you've got employees who are suing in the U.S. for that. A bus rolled over in Argentina that was between your maquila and your workplace, and 5 people were killed, and they want to sue in Houston based on that. How do they jump the border and get into the United States? You say, oh, well, we had separate entities, we're protected on that. Not so fast. I've written a white paper called Cross-Border Caffeine, Cross-Border Liability to Keep You Up at Night. If you want it, send me an email. I'll send you that paper, and it's a bunch of very interesting stories on how people have managed to get into the U.S. and turn that 50,000 liability into 50 million. So, and how you can protect against it. Thanks.
Thank you, Mike. Speed learning, lots of information there. And we're now going to shift to our last topic, and then we'll go into questions. Last but not least, Ken is walking in. Ken Slaton, he's Senior Vice President for Life and Disability Insurance at Global Benefits Group. What's really great about what they do is maybe not a lot of people get excited about insurance, but Ken does because he knows it, and they work everywhere, 120 jurisdictions. And so I think I heard some laughing in the audience from insurance people. It's an interesting topic, and it's particularly interesting because every business owner needs to know more about it. There's some really great opportunities. Ken, please.
Great. Thank you. Unfortunately, I do get excited about reading insurance policies, which says something about my personality, but we'll skip right over that. International benefits. One of the things that sometimes is forgotten is that when the employee leaves the U.S. or their home country, the presumption is that they're covered under the home country's insurance policy, and that's not always the case. So an international benefit plan can provide them all the insurance coverage that they have in their home country. There are some exceptions for employees where they're going around the world. High-risk countries, for example, are a little bit difficult to write insurance in just because of the inherent dangers of working in some of those countries, as well as not being accepted by U.S. companies. Also, one of the benefits, of course, is that the employee's spouse and children can be covered as well. You can imagine if you're sending an American to go work in a foreign country, and the first question from the spouse is, who's the doctor? Where do we go to the dentist? Do they speak English? So it's very important that the insurance company that you pick have that network in place of local language doctors as well as English-speaking doctors if you're an American. A lot of times the employer will assume, well, we're sending an employee somewhere and they're covered under the domestic plan. Not the case. Look at your policy carefully. If that employee is going to be working in Latin America, Europe, the Middle East, they may not be covered. Or if they are covered, it's reimbursement only if they go to the doctor. If you have American in your title anywhere, the doctor in that foreign country will say, you're a wealthy American. You will not get a discount. You'll be paying full freight. And we take credit cards, by the way. So you want to avoid those types of situations and make sure that the benefit plan, especially for health insurance, covers those people in other countries. Counterparts. Send some people overseas, and pretty soon the conversations start after work. What's your benefit plan? How much life insurance do you have? Do you have disability insurance? I work for the same company, but I'm a local national. I don't have those benefits. So something to plan when you're working overseas is to figure out what you're going to do for your employees that you're sending over there, as well as the local nationals as well. You don't want to lose a key employee because they say, well, you go over there, you'll be covered by the local Social Security system. What does that mean? If I get disabled, do I get $894 every 2 weeks like I would in Australia? Or am I going to get 75% of my salary like I would if I was working in the United States? Those questions come up. You don't have a good answer, you have to go back to the insurance company. So from the employer standpoint, if you want to attract, retain good employees, find a way to give them a comprehensive benefit plan. Make sure they don't lose anything when they leave their country, as well as making sure that there's parity with some of the local nationals that are working for your company. So who is eligible? Usually on the benefit plans, there are 3 groups of people: the expatriates, somebody who's leaving their home country to work in another market. You have the third country nationals, somebody who's not from the home office or the home country, but they're moving from one country to the other to work for you. And of course, the local nationals. So all 3 of these groups are different. They may have different needs. They may have different benefit levels, especially based on local regulations. Or you may want to cover all of them. So they're all treated the same way. All these things can be done for the employer. Caesar. There you go. So examples, benefits can be very flexible and comprehensive. Typically in the U.S. market, it's common to have 2 times salary for life insurance. In other countries around the world, you may want to compensate or protect your key people for higher limits, or local regulations would require that the salary benefit for life insurance be 5, 6, 7 times salary. Social systems vary from country to country, so a lot of times the employer is the primary protector for the employees. It's not the Social Security system. Health insurance, very important. A few years ago, I had an opportunity to go work in Hong Kong. First question for my wife was, are we covered for maternity if we have more children? Excuse me. What about dental insurance for the kids when they have braces? Do we have a limit? Do we have pre-existing coverage? All these plans can be built into the health insurance plan for the local national as well as for the expatriate. In fact, the pricing can be so competitive. As we know in the United States, health insurance is very expensive. It's oftentimes very possible to insure an employee outside the country for less than what it would cost the employer to insure him in the U.S. And one of the benefits, of course, if you have an employee working in another country, they're coming back to the U.S. for home leave or for business, their international health policy will cover them when they come back to the U.S. If you're working in the U.S. and you leave the U.S., you may not be covered. It's reimbursement only by your health insurance company, and a top dollar, and with usual and reasonable customary expenses. So that employee could have some out-of-pocket expenses. What you want to do is have an international plan that avoids out-of-pocket expenses for the employee. So can the plans be customized? Absolutely. Many benefits vary from different countries. Short-term disability, for example, very common. Long-term disability, very common. Disability plans do coincide with the local Social Security system. So if the employee is going to be getting a large percentage of their salary if they become disabled, the health insurance policy, the disability policy will offset that. In Brazil, for example, if you are disabled due to your work job and you can't work, you can get 100% of your salary. There's no reason for that employee to get 60 or 70% of their salary from the insurance policy if they're getting 100% from the government. Permanent disability, something different that you don't see in the United States. Very common for somebody to get a couple years' salary if they become permanently disabled right away, a lump sum to help them manage their expenses. Any questions? I kept it in 5 minutes.
Perfect. Thank you very much.
Thank you.
Great job. Thanks, everybody, and great information. Ken and Mike, if you want to stay up here, we'll likely have some questions. We do have a few minutes for questions where this is about when we would, we're thinking that we cut off, but there are some questions that have come in, and I'd like to cover them and maybe just open this up to the floor, because one of the questions is, one of the things that those of us involved with international business tend to see is not enough companies involved with international business. And one of the reasons why is there's fear, there's risk, there's all sorts of things that can go wrong. And what we definitely heard today was, a lot of things that can go wrong. I think certainly the jail in Ghana that was talked about today is certainly one of the things that reverberated in my head. So if I'm a CEO and I'm thinking about international experience, I'm thinking about that Ghanaian jail. So let's flip it around a little bit and say, hey, for the CEOs and executives that are listening around the world, what are some positive things about what we're doing here? You guys are all experts, including Steve kicking off, and you've learned a lot over the years. And what are some of the things that you've seen that have really inspired you to stay working in this area when people do things right? Does anybody want to take that question?
I'll say a couple.
Michael?
I have some names that I don't think they'd mind me sharing, but St. Clair Technologies, if you've ever seen a yellow school bus, it has their wire harness in it, and they're Canadian-owned, based here in Arizona, and have 300 plus employees in the Guaymas area. They've cut their costs, as one of our earlier speakers talked about. They are rocking, and they are competitive. Walbar makes blades that are in turbines on aircraft that are sold to Rolls-Royce and other OEMs around the world. Were it not for their manufacturing in Latin America, they would not be as competitive and as profitable. They bought that division from United Technology, which was losing money on it. They turned it around. They're rocking and rolling. And a medical device distributor in 60 countries that I mentioned, they have found a real profitability in international distribution. So yes, there are some difficulties if you slow down and do it right, so that you're not, so you're not getting the gotcha, as so many of our speakers have said. There is a right way to do this. You do it right. You take your time, set it up, talk to your tax, your labor people, your benefits people, get all this set up correctly. There's a right way to do it. Thanks.
Have you ever known anyone go to jail?
I did. Just real quick, a guy in Latin America had a huge contract with Walmart. He was sourcing his shirts out of a place in Latin America. Their quality all of a sudden dropped. He got it rejected by Walmart. This is years ago, and so he dropped them as a supplier and got a different one. A year later, they said, hey, that $125,000 you owed us, we've been trying to talk about that. Our quality has gone way back up. Can you fly down and let's have a meeting and talk about it? And his needs were increasing. He thought, gee, I'd like to have him back in addition to my other one. And they had no problem with that as well. He needed both and. So they flew down, went to the meeting. And at the meeting, there was no real talk about quality and what the heck is going on, till they got out in the parking lot and there were police there and he was arrested. And then they called Mike, and I found some criminal attorneys and we got him out after, but he spent a weekend. And somewhere out there, he has a pair of my blue jeans, because they took his prison uniform off, and I had to hand through a pair of blue jeans and a T-shirt for me to take him to the airport.
Oh, Lordy mama. Okay, fantastic. Great stories. Anybody else want to share some positive stories of maybe some of the people that you've helped, and feel free to change the names as required.
Well, Doug, this is Mary. When I look at positive, I think for organizations, there's a good talent pool around the world. And so when we determine really what our strategy and our long-term direction, as Steve mentioned, where do we want to go and why, I think you're going to find some talent resources that you don't have in certain locations. And it also provides, in today's world, the ability for our younger people out of college have an opportunity to get talents and skills in areas that will help position them for future development and growth in the organizations. I've seen very positive with that. I also had an opportunity at one point in my career to move a person that was working in Russia. She wanted to relocate to France, so I worked through the process with her to have her permanently transferred to France, and kind of changed her life and existence of a direction where she wanted to go. So I think there's positive on the employee side, but there's also very positive for the organization and getting good talent, and then using I look at it using lower cost locations to build your business so that some of the work is being done there, and then you kind of manage your programs. So opening up different possibilities for us.
Fantastic. Thanks, Mary. Ken has.
Yeah, we do business in about 120 countries around the world, and America sells. There's a lot of comfort level with companies in other countries, individuals in other countries. They like to hear what you're doing in the U.S. They like protection from a U.S. insurance company because we have all these regulations about solvency. So we find it's very attractive working with U.S. employers and foreign employers to give insurance that's protected by a U.S. company. Cost-wise is also very efficient for us because there's 7 billion people who don't live in the U.S. So we work across borders and we insure expats, for example. We had a case where an individual had dual citizenship. He was from India in the U.S. If he bought his health insurance policy in the U.S., we know health insurance here is not really affordable, even though we have the Affordable Care Act. We were able to put together a policy for him that's $1,000 less expensive per year in premium for him and his family, provided he bought the policy while he was living in India. And our policy had no co-payments, no deductible. Good luck getting that in the U.S. So sometimes the international insurer is a better alternative than a foreign employee going to a local insurance company in another market where they don't want to insure you because you're not a citizen, you're a foreign expat, you're not a national. So you need that company who's a hybrid, who can do foreign nationals, who can do expats versus just going strictly local.
Fantastic. Great. Yeah, creativity is the key in that case. Knowledge of the opportunities and what the options might be, and then customizing. I think we heard a lot of the customizing. Anybody else want to chip into some positive stories? I certainly, one of the things I'm thinking about, Steve, hearing your story and the adventure that you went on in Ghana, when you talked a little bit about that, do you think you might have been there too early? Or, and when companies are thinking about markets and maybe potentially jumping in too early, what are some of the things that they should be considering, based on what you've learned? Oh, Steve's muted.
Yeah, here we go. Sorry. There we go. Thanks for unmuting me. No, excellent point, Doug. Really interesting to hear from all the other speakers and their advice, their experience. I can truly validate almost everything everybody has said has been my experience. I can say that I love doing business in these countries that I'm in. Yes, there's a lot of risk. I was fearful early on. But I'm a risk taker. I'm a guy that likes to dive in and figure things out. I enjoy that piece. I can't say I did it necessarily the very perfect structured way, but I did do a lot of planning. So I did do a lot of planning, and I made sure that I didn't make assumptions. I'm kind of naturally that way in business, so it benefited me setting up a business abroad. But I can tell you the greatest joy that I have is the people. The people that, but I should also state that I'm really in a services business. So we're delivering contact center services for companies around the world. And so we're, the product that we're selling, for lack of a better word, is our people. And so the people we have here, I'm at my center right now in Hermosillo, where it is going to be 89 degrees today. So anyways, is the people are spectacular, and they really genuinely want to serve. And I think they very much do appreciate American businesses who come in. And if you come in with the right reasons, you come in with solid reasons, you invest in them, you care about them, you're here to create jobs for them. If you really take the time to be with the people and invest in them and help them understand what your intentions are, they really perform well. So I can say that I've had a really great experience both in Ghana as well as here in Hermosillo in Sonora, Mexico. Very just quality people. Now, it's like anywhere in business. You learn to align yourselves with good people, and you're always going to have bad people that want to latch on to your your business and what you're doing, and they know you're from the United States, and they think you're loaded with money and this and that. And you know, I just bootstrapped this business on my own, and I was not loaded with money. And I did make decisions that got me in some financial hurdles at times. But you learn as you go. And so at some point, I think one of the speakers said, at some point you plan, and you plan some more. At some point, you got to dive in. At some point, you got to do it. You either do it or you don't. And then, you know, once you jump in, start swimming, you got to enjoy the ride. You have to really enjoy it. And I enjoy it because I like the people. And in Ghana, I will say, Ghana is really a fascinating country, fascinating people. I was, Doug, I was ahead of the curve. I jumped in probably too early, and I had a hard time selling my clients on why they should go to Africa. And what's interesting is that was 9 years ago, and I still have business there, but it's nothing like I have here in Mexico, or even through a couple of partnerships around the world in some other locations. But now I'm starting to see Ghana, and I'm seeing Africa start to, it's like I was 9 years ahead of the curve. And I think it's just Americans, we stereotype Africa as just this continent that, you know, all this bad stuff is happening. And that's not the case at all. Africa is 57, I think, different countries, and each country is unique and awesome, but many of the countries are terrible. You would never do business there. I mean, but there's 15, 16, 17 countries in Africa that are spectacular places to do business. And the last thing I want to leave you with is my attorney said something to me the other day. He's been my attorney for, 18 years. And he's helped me with, you know, you always have disputes and things you got to manage in business. And he says to me, Steve, he says, you know, he's helping me with another small issue now. And he says, you know, Steve, out of all the disputes I've helped you with over 18 years, I've never helped you with a dispute where the complaint was about your quality or your service delivery. It was always about some bureaucracy or some disagreement on the contract or this, but it was never about the quality. And that's a testament to the people here in Mexico, in Ghana, and some other locations. I actually have a small partnership with a company in Japan, in Okinawa. You know, that's a testament to the people who are delivering the services. So I'm a big believer in it. And but you're right. You got to plan, and then at some point you just got to jump in and do it. So, or don't do it, I guess. One or the other. So anyways.
Swim with the fishes and hope most of them are not sharks. So Steve, thank you.
That's right. That's right. And there'll always be some sharks. So just plan on that, and then learn to manage that.
And I'll say the point that you mentioned about being a testimony to people. Yes, people are great all around the world, but you as a business owner need to be capable and be able to structure it in a way that's effective. And so it's also a testament to your ability to do that. So congratulations on your success. And really everybody who's spoken today, these are the cream of the crop. This is why people, you know, everyone should be part of the Global Chamber that's interested in growing internationally, because stuff happens. You know, there's sharks out there, there's jail out there, there's the risk side of it, but there's the great opportunity. So thank you all. How about a round of applause for all of our speakers? And if you're having trouble.
What happened?
So if you're having any issues with getting a hold of anybody of our speakers, please let us know at info@globalchamber.org. If you're a member, just go to the directory. But if you do want to get a question asked and answered, let us know. Our next couple of events, February 13th, is about risks going international. So we're going to talk about a little bit more on the scary side, and I'm really excited about that. And February 20th, where we're going to be talking about women in global leadership, and we'll be having a couple of announcements here in the next couple of days about some of the amazing speakers at both events. Thank you, everybody. Have a great day. Stay warm.